Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on euro currency. So today we have prepared the big fundamental report because lots of topics to discuss right now. So, the driving factors for the markets are growing like the mushrooms after the rain. So now we have to split them in three groups. The first group stands around the COVID situation and everything that has relation to it, the economy situation, the relief of the limitations in different countries, how they impact on the overall performance in these companies. Second moment is the vaccine. So you probably know that right now it's big round for vaccine to prepare against the COVID-19, and that's a separate topic that we also covered in today's fundamental report. And finally, the third topic is the all other moments, is political tensions, new political tensions exist, and what impact they made currently on the situation. Just do not bother you with a lot of details. Those of you who are interested with that, you could read the report. In two words speaking, currently, guys, in the long-term perspective, we do not see any one single factor that makes EUR and put EUR in advance in an advantage position compared to the United States dollar. Because economical situation mostly is the same in all developed countries. So the more or less, but in general, you see the drop in confidence, you see the drop of the major data. I mean, gross domestic product, retail sales, PMIs, inflation information, employment, so everything mostly stands approximately the same. But as the United States takes the absolutely, outstanding steps to stabilize the economy that can compare any acts from the European Union, that it could just stand in the eve of the approval, the 500 billion euros pact. Since now the Germany and France, this was the major driving factor for last week. But this is like the pie to the elephants. So the 500 billions compared to the trillions that have been injected by the Fed, it's nothing. So, and the United States dollar again approves and confirms the specific role as a safe haven in all turmoils that happen in the world globally. From that standpoint, euro has no chance to compare it to the United States dollar. Second moment that we see is that, European Union is too separated by the own interest of the different countries, and they can't act together. We talked about it in the previous researches as well. That really put the shadow on the perspective of the euro as a comparable currency to United States dollar. So in the longer term, that's why we do not see any factor that could really turn the situation in favor of the euro. In the shorter term situation, we have not good surprises from the weekly chart on euro, because on the weekly chart this week we've got another bearish grabber. So that's why we have on the euro 2 weekly grabbers. And also, if you remember, we previously pointed on this top, and we said, and this was 3 weeks ago, and we said that market has to break through this level to turn, or at least make possible changing of the situation in the bullish scenario. But market hasn't broken this top, as has formed two bearish grabbers in a row on the weekly chart. All this stuff brings, not good sign for the bulls. Besides, on Wednesday, in the next week, we will keep a close eye on the European Union meeting, where the France-Germany supportive pact will be discussed. And if we will see the lack of the consensus among all countries, how to split this money, how they should be provided. So if we see another prolongation in adoption of some help to the countries in the European Union, that will be a very negative sign for the euro. And I will not be surprised if it will push euro significantly lower and we'll see the breakout of the range. Because currently, guys, euro stands in the range. And the rally here was mostly on the background of this Franc-German pact. If we see any problems with this pact, that will return euros right back down. So that's what we have approximately on the fundamental part. And that represents the overall situation on the daily chart in a bit different view. Because currently what we have technically, with the bearish grabbers on the background and in confluence resistance that had not been broken for the third time in a row, as you can see, chances for the bulls decrease significantly. And currently, as we said, and we talked about it in the last week, the market stands at the vital point. Here's the middle of the range. So as you know, the upward breakout usually happens, very often happens at least, when the market just stops in the middle of the range, turns up and shows the breakout. Dropping below this level will lead market right back down, or even we'll see the breakout of this range next week. That's very probable. So here's the point that will answer on all questions on a daily chart. On the 4-hour time frame chart, we do not have something really new, so just minor response on the level which has started from the euro since Friday, since hit the 109 area. Our major chart will be hourly. So here we also have not good signs from the market. First of all, recall the butterfly that we have discussed here. It's 1618 butterfly. Butterfly has failed. So no even minor pullback. So you know that at least the 30% pullback has to happen on the reaction of the butterfly. No reaction at all. And remember that that was a confluence support here around this level. So the breakdown. Now we're watching for this A, B, C top pattern OP. Right to the OP, the second surprise, we have the acceleration. This is not a good sign as well. So since here is relatively strong support, I would suggest, and especially on the background that we have the bearish reversal swing here. You can see the recent reversal swing down is greater than previous swing down, swing up. So that's reversal swing, and suggest that some pullback here probably will happen. Besides, XOP creates the agreement with the 108.58. This is major support level. Right from these lows to this top, 6-1 is support and agrees with the XOP. So what we suggest, if you already have taken the long position, since market already has started this reaction, move your stops to the break-even as possible. Now I would suggest if market will climb a bit higher, it will be better to close the position and see what will happen. If you still would like to take part in all this trade, in this gambling around the voting on Wednesday in the European Union on the Franc-German pact, you could keep the longs with the hope that this pact will be approved and your bureaucrats will come to the agreement. On this case, euro should start pricing. And the clarity level will be 108.58. That's the crucial area, as you can see, because it's last strong support that we have. So if you still would like to take the long position, would like to take part in possible reversal, place initial stop below this area. For others who do not want to take part in all this stuff and worry about the grabbers that we have, it would be better to move stop to the break-even or even close positions at the pullback that probably should happen somewhere from this area. So that's how we view, because, well, guys, on the background of the coming voting and the new technical patterns that we have currently on the euro, the situation stands a bit different compared to what we had last week. And the chances of the bulls have less chances to success. Although the chance to close position at the break-even, even with some profit, exists, because we have the time till Wednesday, and we're at the strong support area. Probably some respect, some at least 30% pullback here should happen.